Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your cannabis business podcast. We're going to take a look at cannabis layoffs signaling an industry-wide problem, according to this Benzinga article. The trend in layoffs in the cannabis industry, which started in 2019, have done nothing but accelerate in 2020, with MedMen cutting more than 40% of its workforce, Pasha Brands 24%, Zenabis about 10% of its staff, all the way down to Leafly, Mile High Labs, plenty of other private companies laying people off. So in the latest move, Tilray announced that it's going to fire 140 people, or 10% more of its workforce. And Aurora would be doing the same, cutting 340 jobs. This is definitely ending a sense of exuberance. I think a lot more investors are going to be looking at it with a fine-tooth comb, looking for that valuation and not that crazy speculation, wildly made up valuation. $420 million. Yeah, right. Pax Labs. Just wait for that. So cannabis companies and investors have overextended themselves, driven by the exuberance that comes with an emerging market and an attractive story. So there's been a lot of cutbacks, including Weedmaps, Pax Labs, Ease, Hexo, CanTrust. Most executives are temporarily looking at this as a speed bump to try and dominate this industry, cutting back. Like Brandon Kennedy, CEO of Tilray, saying that they're going to reduce headcount and costs to be better positioned to achieve profitability. If people are your problem, I think you're doing it wrong. So the co-founder and managing partner at cannabis investment fund Poseidon Asset Management said that cannabis companies were forced to cut back on expenses after a period of overly fast growth without a focus on revenue generation and a path to profitability. So a lot of them raised capital without a real plan. They also didn't have a CFO or capital markets analyst. They didn't have anybody managing the funds. So of course they were going to waste it. They never had a plan to begin with, which is insane to me. And now, quote, these companies are now under a microscope. So everyone's going to be looking at that and probably trying to bring in more professionals to oversee it. But even the ones that I know of, whether it's an e-commerce platform or an airline, there's not enough financial oversight, not enough people to delegate to, small teams, and investors are just kind of sitting back waiting for their return on investment without having more of an active position on the board or within the company itself. So it's kind of like they're on the outside looking in, and I just think that's laying yourself out for potential disaster. There's an international lawyer and cannabis journalist said that the layoffs were unfortunate results of what he calls irrational exuberance, extraordinary capital investments, unrealistic business plans, a myopic focus on share price, which led to unrealistic hiring initiatives to spur that growth, and those employees are the casualty. Some analysts expect some trimming at Canopy, so predicting an 82% reduction in their quarterly losses. So they expect a market reduction in sales and a marketing expense, including staff layoffs, cutbacks on strategic spending, and idling of underutilized product capacity. So the 2020 prediction podcast that we did kind of talked about a reset closer to fourth quarter. Some of these companies go out of business or are forced to capitulate or create some kind of co-op model to stay in business. That correction is going to be a pop for those that are remaining, but it's going to take a lot of layoffs and companies go out of business in order for that to happen. So it's a necessary layoff. Painful to many, especially those out of a job. Layoffs seem to be necessary evil in the cannabis industry for a path to maturity. Many analysts and especially executives have argued, acknowledging that the layoffs are far from ideal. The job creation on the backside of this will be lasting and important to the next phase of the industry. I've seen a lot of people that are laid off and yet not taking advantage of it. So if there's high times and they're going, they bought Dope Magazine and then Dope Magazine collapses, they have to fire everyone at Dope. Well, now you have a lot of individuals that are talented where you can pull them in. So you need to be positioned to take advantage of some of this collapse. There's going to be assets, and people are assets too. So take some of those people in and make your company better. You need to delegate. So if you have founder syndrome where you're putting roadblocks in your way and you can't delegate, that's an issue. A lot of companies don't sell their equity because they have that Steve Jobs story of him getting fired from his own company. But if you aren't in the right position, maybe you should be fired. Think about that. Take yourself out of the role. You're probably not the best person to run your company. There's going to be some other person that has a better experience with consumer product goods or tech or otherwise. And so you want to be able to delegate. You want it to be the dumbest person in the room. At least I do. I want to be with a bunch of other smart people that are able to scale, automate, expand. And if you don't, you're just going to be on the wayside and irrelevant at some point. So some of these stronger cannabis businesses from a fundamental standpoint have been heads down, focused on building and scaling without so much attention. And so these businesses are going to continue to grow in the industry and are in fact hiring. We've talked about having an exit strategy, and a lot of these companies probably didn't have an exit strategy. They put a price point that was too high, wholesale break-even points at $1.74 per gram, probably not realistic long-term. And so bringing in executives that aren't familiar with the industry, I think was going to be a detriment to their shareholders. I've said before, they have a fiduciary duty to do what's best for the shareholders, and it seems like some of the insiders are the ones gaining for now. That's an immature market. I think a lot of those individuals are going to be let go. I think the industry has kind of seen some of the worst or the beginnings of the worst. We haven't even started seeing the collapse of many of these companies. There's going to be a huge amount that go out of business this year and next year. In order to kind of weed out the bad players. There's just not a lot of savvy business people. There are exceptions to the rule. There are people who are great at what they do. They just haven't established the right teams, haven't got the right capital, haven't automated, scaled, expanded. And so if you're in your own bubble, in your own zone, and you're not seeing what else is going around you, you're going to be leapfrogged by somebody else. So I think a lot of that is happening too. And so there will be the Larry's Handy Mart and a sea of 7-Elevens for some of these retailers who are unable to keep up with the pace and who are too worried about losing their shareholder rights. So they aren't looking for capital to expand to multiple locations. So they have like one location instead of the maximum in the state now went from 5 to I think 6. So you can have 6 retail shops per owner. And so you want to keep moving. You want to go and expand and build your brand. A lot of these companies are too inundated with the regulations or their current position and unable to take advantage of the opportunity, the first mover advantages of being in one of the first regulated markets. And what I'm seeing is just a potential catastrophe in the industry where there's going to be more layoffs, more companies going out of business, but that creates opportunities. So position yourself to take advantage of the individuals, the property, plant, and equipment, and just know that you have to generate revenue. Otherwise, you're not going to be in business much longer. With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.